When you think of investing, the first thing that comes into mind is this complicated world of the stock market. With so many charts and numbers, it's easy to get confused. So let's break it down and try to make a sense out of it. Let's say you have built a business, but now you need some more money to expand, or maybe you just want a private jet. Where do you get the money from? Here is an idea for you. Why don't you break down your company and sell part of it, while you keep the majority to stay in charge? That's what stock market is for, and this process is known as initial public offering. But how much money can you actually raise? Let's take an example of Mark Zuckerberg's little toy, Facebook. It went public in 2012 with 337 million shares at a price of $38 a share. Not bad, right? But when he realized that there are so many more people who want a piece of his pie, he added another 84 million shares. And guess what? He sold every single one of them and raised $16 billion. He literally became a billionaire in just a few hours. In fact, the stock price increased to $45 within the first day of trading. But it was too early to celebrate because it fell back to $38 by the end of the day. And that was just the beginning. The bad news were just starting. In the next few weeks, the stock price crashed to as low as $20, twice smaller than its original price. Now, in order to understand what's happening here, we have to get to the roots of the stock market. In the past, stocks were acquired primarily for dividends. Theoretically, when you buy a stock, you become the owner of that company, which means that you, like any other owner, have the right to the profits of the company. Congratulations, you have purchased 10 Facebook stocks in January of 2017, and now you are the owner of Facebook exactly like Mark. And I'm not kidding here, try not to laugh. So your company makes $16 billion. How much of that belongs to you? At the end of the day, you have spent $1,300 to buy your 10 stocks. But let's first take a look at how much stocks are there in total. It turns out that there are almost 3 billion of them. I doubt that your 10 stocks matters now. But let's be optimistic, because if we divide the net income on the number of shares, each stock should earn you a little over $5. By the way, that's known as EPS. In other words, your 10 stocks supposed to earn you $54. Not bad, right? But that's just hypothetically. In practice, you get absolutely nothing. The board of directors is the ones who are going to decide what to do with this money, and their first priority is to fill their pockets and expand the company. So no one really cares about your 10 stocks. But don't worry, not everyone is a scammer like Mark Zuckerberg. For example, last year Apple paid $13 billion in dividends, or $2.5 for each stock. Of course, it's not much for a stock that cost $170, but something is always better than nothing. However, today it doesn't really matter how much the company pays as much as the price of the stock itself. Apple stockholders experienced a 33% gain within a single year. That's way better than market's average. You probably have heard that Apple is the first company to cross $1 trillion valuation because its stock price crossed $200. But what if I told you that until the June of 2014, Apple's stock price was $645? Does that mean that the company was already valued at more than $3 trillion? Oh god, the stock market is so freaking complicated. Let me explain. There is something called stock splits. Each stock was split into 7 pieces and the prices were decreased proportionally. Technically, nothing really changed, but now more people can afford the stock and join the community of Apple investors, since the stock now costs only $92. But not all companies do that. Some prefer to only work with serious people, such as Warren Buffett. His company, Berkshire Hathaway, has never split their stocks. That's why it only has 1.7 million shares. In comparison, Apple has 5 billion. That's why a single Buffett stock costs over $300,000. I guess most of us will never join Buffett's secret investors society. But don't worry, Buffett wouldn't mind taking your money as well. That's why he created Class B shares, which are more affordable. The topic of the stock market never ends.
Stock market is a place where you buy and sell shares of companies listed publicly. Companies like Tata's, companies like Birla's, companies like Reliance, and further there are 6,000 plus companies which are listed in our stock exchanges or in our stock markets. Why stock market is needed? Let's try to understand that. So let's say if we are a business, and for a business to grow it needs capital, and from where can it get capital? It can get capital from three different areas primarily. First is a bank. Bank normally gives capital in form of loan to the business for a certain particular amount of interest which the business needs to pay back, and the interest as well as the principal. The second form of investment a business can get is in form of individual investors or private equity, where they buy certain percentage of the company, and they get certain percentage of the stake which they can later on sell the stake at higher levels. But if a company wishes to raise huge amount of capital from thousands of investors, in that case the company needs to go public, and to go public they need to list their shares on the stock markets, and that is where stock market is needed. So companies, they get their shares listed on the stock exchanges, and they get the money from the public to improve their business. Now let's try to understand the structure of the stock markets. So Indian stock markets consist mainly of two exchanges. One is the Bombay Stock Exchange and the second is the National Stock Exchange. The Bombay Stock Exchange has 6,000 plus companies listed on the exchange, and National Stock Exchange has 1,600 plus companies listed. The Bombay Stock Exchange primary index is Sensex, and the National Stock Exchange primary index is Nifty. Sensex contains like 31 companies, Nifty contains like 51 companies, and this shows the direction of the general markets overall, the index. That's what the index are meant for. The second participant is our depositories, that is a national depository we have, and we have central depositories. That's where our shares get stored. And the third components and the important components are our brokers. So they are the one who facilitate the trades between the individual investors and via the share market. Now let's try to understand how to trade in stock markets. Okay, to trade in stock markets, first of all you need to have a broker, a broking account, which is a trading cum demat account. I am giving you a link into the description section of the video of my favorite broker. So if you wish to open, you can click on the link in the description as well as the first comment section, and you can open up an account. So to open a trading and cum demat account, all you need is a bank statement of 6 months. You need a cancel check, you need a photo of yours, you need your Aadhaar card copy, and you need your PAN card copy. So these are some of the main important documents which you need, and the account gets normally opened within less than a week or so with the broker. So now let's try to understand the basics of how to buy shares into the stock markets and how the mechanism works when it comes to buying. So as soon as your account gets opened with the broker, make sure you transfer the money from your bank account either via NEFT, or you can do via online transfer into your trading account. Once the money is into your trading account, you can place an order via your broker. So the broker would push your order into the exchanges, that were to the National Stock Exchange or the Bombay Stock Exchange, and as per your buy price, the stock exchange will try to match your order with the best seller, and when your buy price matches the selling price, then the order gets executed, and finally the shares which are bought gets delivered into your demat account after T plus 2 days. That is, if you buy today, the shares will get credited after 2 days. Now let's try to understand the simple part about how to sell a stock. To sell a stock, again the same process. You need to place an order with your broker. The broker forwards your order to the stock exchange, okay, and in turn the stock exchange will look for the best buyer on the other side, and whenever your price gets matched with the buyer, the order gets completed, and by the end of the day the stock which you are holding gets debited from your demat account, and you can get a payout after 30 plus 2 days, and you can request the withdrawal of the funds into your bank account if you wish to from the broker's account. So what are the various ways of placing an order with the broker? So there are three ways of placing an order to the broker. First is via mobile app, second is via telephone, and third is via online trading. So these are the three options which are available to place an account. Now finally, what are the share market or the stock market timings? The stock markets are open from Monday to Friday, okay, except for public holidays. The market opens at 9 o'clock, and 9 o'clock to 9:07 is the pre-open time, but the general market opens at the 9:15 and the market closes at 3:30 p.m. sharp. Okay, so before you start to invest into the markets, what are the two main things you need to study into the markets to be consistently profitable and to make huge profits into the markets? The first thing what you need to learn is called as fundamental analysis. What is fundamental analysis? There are few books which have given into the description section as well as into the first comments of the video, my top 3 books. You can download those fundamental analysis books if you need to understand what is fundamental analysis. That's very important. Secondly, you need to understand also what is technical analysis. Technical analysis is nothing but just trying to understand what is the price and where the price is moving is what you get to see. So guys and girls, if you really like this video, make sure to click on the subscribe button below and also click on the bell icon.